Hi everyone and welcome to today's morning report on Tuesday the 15th of March with me, Rich Perry, market analyst at Handset Markets. The open trading session's got off to a slightly negative start, not too significant to the downside. Slightly more cautious outlook as you've started to see commodity prices. Interestingly, the oil price falling away. The oil price has been a big driver of markets in recent weeks, and that's now started to roll over, hasn't it? Broken that uptrend, and it'd be interesting to see if this turns out to be the beginning of another correction lower. I mean, the move has come on the back of the news that Iran is not going to take part in the production freeze, instead obviously opting to ramp up its production in the wake of having been under sanctions for so long. So it's going to normalise its production until up until it can start to even think about freezing. So that's impacted the oil price in the last couple of days, and it started to fall away. Slight air of caution has come also with the fact that we had the BOJ meeting. They had painted a pretty downbeat view of the Japanese economy. They stood pat on monetary policy. They didn't make any changes, sort of opting to sort of look more at how the move into negative interest rates is going to affect Japanese economy first. So they've not done anything really for the Japanese yen, but it is strengthening, and that is one of the one of the signals that show that the market is fairly much into a safe haven mode. You're seeing not really a great deal of movement on treasuries. We've got the start of the two-day Fed meeting today, and maybe the market a little bit cautious in front of that. The dollar not too much, a little bit of sideways move, but generally speaking, the yen is the big mover on the day, and there is a bit of a retrenchment of risk appetite across the commodity currencies as well today. That takes me to what we're going to talk about for the drivers of today. There's still a fair amount of data actually today. Starting off with at 12:30, we've got three bits of data. You've got the US Fed manufacturing, sorry, the UK, what am I talking about? The New York Fed manufacturing index. It's expected to come in at -10 again, so again, very negative reading there at 12:30. This is, don't forget, the next couple of weeks we've got US data that is all coming out an hour earlier in European time. Then we've got the PPI, Producer Prices Index, expected to actually on the year-on-year data improve to plus 1.1% there on the year-on-year data, so that would be an improvement. And the retail sales. Now, last month we had plus 0.2. This month is going to be minus 0.2 on the core data. Now that would actually start to just drag that improvement in retail sales down a touch, but not a material amount, but certainly that is just a little bit off the top, but nothing too significant. And the NAHB Housing Market Index expected to improve just very slightly, having dropped to what was that, 7-8 month low, improve very slightly to 59. But it still remains pretty high, doesn't it? So that takes me to my chart of the day, which is silver. Now we've seen gold, which is coming under pressure, and I'll talk about that gold chart in a bit. But what's the outlook on silver? Well, we have broken the uptrend on that hourly RSI. Interesting, on the RSI, daily RSI. It sort of started to tail off. Momentum indicators generally rolling over potentially. And it's interesting because we've had a fairly choppy period recently. That was last Thursday when we had the ECB day, big bullish engulfing pattern. But yesterday we had a bearish engulfing pattern, moved to a new high at 51.82, then it closed well below the previous day's low. And I'm still looking at this market thinking that the Fibonacci levels are still key. Look at the 38.2%. Consistently coming in as a basis of support. Also 61.8 caught that low, pretty much bang on. So these fib levels of 61.8 and 38.2% are quite considerable, and I think that we're going to put pressure on that 38.2% again, because I see this chart as just one that's rolling over. You've got the sort of couple of candles in a row have been negative candles, and obviously that bearish engulfing pattern as well. We've had a slight bit of downside today that's just sort of settled a little bit. Nothing too significant in terms of direction yet on the day, but you'd certainly argue that I think this market has started to roll over. Dollar yen, that's not dollar yen, is it? There you go, silver. And what we've got here is a bit of a pivot line. Look at this 1544, provided a base of support, base of resistance, base of support. So that could now again become the basis of resistance. So that is your first line of resistance that you're looking at for today. You're also trading below all the moving averages. You've got a slightly corrective outlook on these momentum indicators on the hourly chart. Nothing too significant. You're actually seeing a little bit of a near-term uptick on that MACD line, or those MACD lines, that you might see a little bit of an improvement, but certainly looks as though I think you're sort of going to be now pulling back towards a retest of that 1513 reaction low that we saw with the ECB on Thursday, and I'd be very interested to see what happens, because if that completes the top, you'd see it quite quickly probably back towards, once again, that 61.8% fib level. So there is the prospect of pressure, I think, on that support at 1513, and a breakdown would, as I say, complete a minor top pattern. And we could see that, because I think the momentum indicators are sort of starting to fall away on the longer term, medium to longer term basis, and it's interesting because it's also coming at a time at which gold is starting to also fall over as well. So that is the outlook for silver, and I wish you good luck in your trading today, and I will speak to you later. Thank you.